What's going on, everyone? Indoor sunglasses engaged. Today we are going to be talking about G Medical Innovations, or GMVD stock, bringing you guys the update as we are up about 6% on the day, and there was some absolute crazy shenanigans going on in pre-market. Specifically, we broke $1. Now we're back down to 90 cents, so we'll be talking about that as well. So drop a like on the video if you guys enjoy this content, and subscribe to the channel if you guys are new. Also, if you wanted to check out Hootmoney trade alerts, it's that first link in the description down below. You get access to all of my buy and sell alerts, some exclusive due diligence, like for example bearish due diligence, which doesn't really end up on my channel too often because you release bearish due diligence, you get a bunch of trolls. So that is a Hootmoney exclusive down there. Also exclusive videos such as how to YOLO without taking on any risk. Some members have mentioned that the exclusive videos make it worth it alone. Videos like that won't even perform on my channel, right? So that's why I post them over there on Hootmoney trade alerts. Anyways, enough of all that. Let's get right into this. So we are coming up right as of now. So that is good. As you guys can see, we did breach 90 cents per share, up 7% on the day. So not terrible, but it's not where we want to be, and especially after the run in after hours where we got up to 91 cents, and then at 4 a.m. this morning it jumped up all the way to 103, where there was just some weird crazy little rug pull that ended up occurring, and this is just completely manipulated price action. I mean, if we're just looking at this on balance volume right here, let's change it to normal candles. You'll see that it upticked on a sell volume candle. So we had a big volume spike, then a big sell volume candle, and then OBV just started plummeting, right? So this is clear manipulation. I mean, it looks like they bought and they dumped, something like that, right? And then the price came down, keep coming down until this 85-cent support level right here, came back up a little bit at open, and now it is just consolidating, doing its thing, using 85 cents as the new support level. So this price action might look like it's a rug pull. It might look like someone is selling, but I can assure you guys that it is not, because we've seen this pattern on and on again. Right here on July 5th, we saw an extremely similar price action where it goes up, it gets rugged, and then it consolidates using 60 cents as the new support level. And this was much further before those failure to delivers were due. So there was 1, 2, 3 days of consolidation before it started legging up. But now, since those failure to delivers are due by next Monday, we could potentially see it start to leg up even sooner. So next I want to explain the on balance volume, because the on balance volume can show you what's been going on. So since Friday, where this stock price was at 86 cents, only about 3 cents less than what it was trading at right now, on balance volume was all the way down here. Since then, there's an excess of about 300,000 buy orders from sell orders, and the stock price is only up 3 cents. You can also see that compared to where it was in pre-market, the on balance volume is substantially higher, yet the price is substantially lower. This is what we call bullish divergence. It's where the price is decreasing, however the indicator is coming up. And on balance volume is a very good indicator because it really just measures buy volume and subtracts sell volume. So it is clear and obvious that there has been more buyers than sellers as of today, yet the price has not moved. So what ends up happening is that this is a suppression tactic. So they're using dark pools, they're using exempts, they're using failure to delivers, whatever they can use to keep us trading in this range. And then once people get bored, once people think that, oh, the price action isn't doing anything, let me sell, then that's their tactic, right? They want you to sell into this boring period. They did the exact same thing back here, and as you guys can see, they drop it down, on balance volume would come out, little by little, right? As people get shaken out, again, right here, little by little, people get shaken out. Even though it is up overall, right? It is up overall, but you are seeing it come down since market open, right? It comes down, it comes down, it comes down as people are getting shaken out. People think this is a rug pull. That's exactly what the market maker wants you to think. And even though the stock price is consolidating, there is clear selling pressure as people are letting go of their shares, even though there is an excess of buy orders over sell orders. So you have to understand that, or else you will just get shaken out at this 85-cent level while everyone else is holding and riding to the top. Now, more people are holding, obviously, than selling, but there's definitely a few people that are selling. So understand that 85 cents is support, and it's likely to come up from that level rather than come down. All right, market cipher is also looking pretty hot right here. Daily chart is showing that there is no real sign of anything slowing down. We're not even overbought, not even close. VWAP is still pointing up on that daily chart, so we are chilling in terms of the daily chart right there. Moving into the 12-hour, looking good as well. 4-hour, looking good as well. There was a red dot there in pre-market as they did manipulate that price action in pre-market, but it is coming up right again right now. Same thing. We came up real hard in pre-market right here, gave it the green means go. It was getting ready to squeeze, and now it came right back down, found that support at the 85-cent fib level right there, and now we are coming back up again. And there is a green means go buy signal on that hourly chart. So that is looking good as well. Technicals are all looking good. Let's jump right in to Fintel right here to look at some of the short interest data. As of 38 minutes ago right here, and we'll give it a quick refresh, there were 0 shares to short. Yeah, 2 hours ago, 0 shares to short. So we'll see if they find anything else. But right now, they are completely out of ammo. As of last week, they had a ton. They had over 300,000 shares to short pretty much out of nowhere. They're probably finding shares from retail investors that don't have borrowing off. So if you do have borrowing turned on, make sure you guys do turn that off and call back your shares if it is possible. But now they have none, right? So we're chilling, 90 cents. They have no shares to short. There's literally nothing they can do at this point because there are no options available to be traded. There's no warrant risk until $1.50 per share. Watch my other DD if you want to look at the warrant risk. The cost to borrow, this is going to be coming up very, very, very much soon. If we look at Ortex's cost to borrow, it's showing a fat 281.66 right there, 281.66, and then another 281.66. This is for the max, average, and minimum cost to borrow. When it's showing the exact same number for all of them, it either means that there's nothing left, like they can't even short anything, or it means that they're still calculating the new cost to borrow. And from my experience, it usually ends up being a little bit higher than what it says right there. That's funny. It says 200 likes for the microwave beer chug. Ignore that. Ignore that. We'll do that tomorrow on live stream, but we're not going to do it right now. I also want to briefly touch on my Reddit post because it does have some good information on how this stock likes to act. Essentially, the price action that you should expect out of GMVD is more so a negotiation for you to give up your shares, as I kind of explained already, rather than a price based off of supply and demand. We referenced the last Reddit post that I posted on Thursday. The market maker will control price action to some extent here, basically creating a negotiation. You will see the stock quickly move up and or down and stay at that price level for some time. These are not natural market forces, and that must be understood. If people are holding and volume is low, they are literally negotiating with you to sell your shares for cheap. And if you don't sell, it'll incrementally move up higher until it is finally time to cover. When they finally cover, they will launch high frequency trading algorithms to manipulate price action and attract liquidity with high volume from day traders. The stock will also likely to increase 50 to 100% on that volume. So what I was referencing there were the 2 days where we saw 60 million volume and over 20 million volume, and these were days where they likely were covering some of those short exempts. 20 million volume and 60 million volume, that is not from retail investors, which is why I mentioned high frequency trading algorithms and then also day traders. So a lot of the volume ended up coming from day traders that get attracted to high volume, but also just high frequency traders, because retail alone is not producing over 60 million volume in a day from this move right here. No, they're using high frequency traders to essentially shake people out, do the same things, right? They manipulate price action with the high frequency trading so that they owe less, and they're also attracting artificial liquidity from short sellers, all of that jazz, right? And that lets them also get out of their positions. So when we actually do see covering such as 613 and 621, we are definitely more likely to see a lot more volume than 2 million volume in a single day. We didn't even see that on Friday. We haven't even seen over 5 million since then. So they have definitely not covered yet. And to visually explain this price action, I did make a graph using tests and increments. So the increments are basically where it finally moves up. It finally breaks resistance and moves up to its next level. The test is when it gets rejected hard at that new resistance point. And usually the test, the level that it tests, ends up turning into a support level. So let's go over this one by one. Right here was the first test. It was around 65 cents, and then it came right back down to 51 cents where it found support. It used that as a triple bottom. It comes up again, right? It retests this level one more time, 65 cents, consolidates only overnight, and then it gets its incremental push back up where it finds its new testing level and ends up testing that level one more time in pre-market. You can see right here in pre-market, it's looking very, very similar to what we actually saw today in pre-market, where it spikes up in pre-market and then it comes right back down. Then this is the consolidation period where they are negotiating, right? So right here, it stays flat 3 days right there, does not break the support level of 60 cents, right? And then that is where we get the next increment. So if it was able to hold the 61 cent level, it was able to do that for 3 days, then we got that next incremental push right back up, and we're doing the exact same thing in this area, but our new support level is 85 cents rather than 60 cents. So this is what I mean by the negotiation. They're trying to hold this thing down beyond what the price really should be, hence why the thumbnail said this is a fake price, right? Because the more shares that they get to cough up at these 85 cent level, the less money they're going to have to cover these failure to delivers for. It's pretty simple when you think about it. I mean, they'll use the dark pool, they'll use failure to delivers, they'll use short exempts to control this price until they can't. And we've already seen them, and we've already seen what happens when they can't. It gets that incremental increase, and then they repeat the process. So what we can do instead of getting shaken out is understanding that the price level is fake. It's not worth selling at this level and not selling in to this support, right? If you sell in to 60 cents, that is how you are just giving market makers literally free money. If you're selling into 85 cents right now, again, you are literally just giving these market makers free money. And this is all because, plain and simple, the price is fake. They want you to sell into that. They want that on-balance volume to come down intraday before they actually are required to cover, so they have to cover less. So what you can do instead is, instead of selling into this weakness, which is what they're trying to do with their algorithms and whatnot, you can actually accumulate and buy into this weakness instead, so that there's an imbalance, that their algorithms get thrown off because they're expecting retail to slowly sell off, and that can perpetuate that next leg. And inevitably, before those are due in about 1 week and 1 day on July 19th right there, they're gonna have to cover this thing. So let's talk about when exactly they might cover, because that is the next big thing. So we'll scroll down to the bottom of this Reddit post because I actually talk about the formula to squeeze. So let's just go over that real quick. So accumulating / holding at the 85 cent level rather than selling is what will take us up to the next level and inevitably get us this squeeze. Failure to delivers must be covered by 7/19, so July 19th or next Tuesday. 1.8 million of them, probably more that aren't reported. As you guys see right here, it only really goes up to around the middle of June. So failure to delivers are only reported every 2 weeks. So we don't have anything from the end of June or first week of July so far. So it's probably more failure to delivers than 1.8 million, and that's 18% of the free float alone. But this is where the juice comes in. So they are going to be covering for a loss. What this means is that market makers will probably wait until the last possible second so that they can shake out as many people as possible. This means that failure to delivers are likely to either be covered on Friday, July 15th, Monday, July 18th, or the final day for them to be covered, which is Tuesday, July 19th. Because if they end up covering it before that on this week, which is the 14th, which is on Thursday, this will show up as failure to delivers, because the high volume, the high frequency trading that we talked about right here, this is what is causing that the failure to delivers. More volume usually means more failure to delivers, and if they spike it up, if they cover, if they use all of that volume, attracting a bunch of day traders as well, that'll just cause more failure to delivers, which would end up being reported at the end of June. So I really don't think they're going to do it before the 14th. It's probably going to be on either the 15th, the 18th, or the 19th. So mark that on your calendar. We'll also get more failure to deliver data on the 15th, which is this week. So on Friday this week, we'll get more failure to deliver data, and that will be for the last 2 weeks of June. So on this date right here, with 20 million in volume, where the share price ended up going up to $1.18, we will get an idea of how many failure to delivers that caused. So that will be another thing to look out for at the end of this week. The code has been cracked. It is up to retail to be resilient on this highly manipulated ticker. Just understand that we have not seen any significant volume yet, and therefore we have not seen any covering / squeeze yet. Refer to the volume on 613, blah, 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 blah. My friends, that is about it for the video. I hope you guys have enjoyed. As always, that is the update on G Medical Innovations, or GMVD stock. Everything right now is in the plan, in the books, and we are doing a very good job. On balance volume is way up, so all we really got to do is continue to hold, continue to accumulate if you guys want to. Nothing here is financial advice, but we are doing very well. So congratulations to everyone who is in this play, has seen some success so far, and that's all I got, my friends. I'll be seeing you guys next time. Drop a like on the video before you guys go. Subscribe to the channel if y'all want more content here, more videos each and every single day. And if you want to join Hootmoney Trade Alerts, that's the first link in the description, first link in the pinned comment section, where you get all of my buy and sell alerts outside of just obviously GMVD, which is the main stock that I am covering right now. Exclusive due diligence, including bearish due diligence, where we talk about some meme stocks that might be good to go short on. I'm not going to make videos on that because, well, it just doesn't make sense. It doesn't make, I'll just get hate for those. So I'll post those in Hootmoney Trade Alerts. And yeah, join that if you guys want to. Anyways, I'll be seeing you guys next time. Have a wonderful day.